Good afternoon, everybody. Welcome. Welcome to this week. And what a week it's been. What a week it has been. Oh boy. Gotta say, it's good to be here on the weekend. We're gonna have, I guess we're gonna have a pretty chill afternoon here. We're gonna take your questions. We're gonna talk about a few things going on in the news, all of that fun stuff. So you guys can take it wherever you want. Also, returning this week because of a request is the subscriber-sponsored video. So I did have a request to bring that back. So that is now currently active. The way that works is if you want to take it, it's first come, first serve. $20 super chat. You tell me what that subscriber-sponsored video is going to be. So it can be a deep dive. It can be a list video that you want. It can be, well, it can be pretty much anything as long as it's financial. As long as it's financial. And one stipulation, no penny stocks. I'm not going to do a deep dive on a penny stock. I made that mistake once. And not only was a penny stock, it was a penny stock that was brand new. So there was no data. It's hard. Trust me, guys. It's very hard to do a deep dive on a brand new penny stock that doesn't even have any trading data. So I did my best. But anyway, if one of you do want that, maybe the person who requested I open it up this time around. You guys know what to do. You know what to do. All right. I want to get to a couple little things. First of all, we had a really good bank week. So all of our bank stocks, they did really, really well. And actually made this little thing here. Just give me a second here. Let's head down into the share. I forgot to bring up the share screen, but that's fine. We can rectify that pretty darn fast. Here we go. Let me just share that. We'll bring that up. Here we go. That's what we're looking for. All right. And I think I actually closed that window, but I should still have it here. I hope I still have it here. Oh, yes, I do. Here it is. All right. So here is our bank data. So this is all of the earnings that came out this week. So most of you probably already know this, but everybody exceeded expectations for their earnings as well as their revenue. And all of them but Scotiabank increased the dividend. Royal Bank and CIBC both pushed their dividend up by a full 10 cents. That's pretty good. That's pretty good. We got 6 cents from National Bank and 4 cents from BMO. And at the bottom, TD just with 3 cents. But nonetheless, if you're holding those bank stocks, there's a little more money there now for you coming in terms of those dividends. Now, speaking of banks, we've got the Bank of Canada rate decision coming up on the 10th. So that's what, let's see, Wednesday? That's Wednesday. So we will find out whether or not we're going to get a rate cut. And guys, I'm going to tell you right now, we're probably not getting one. There's been a lot of positive news. So some of the things that are sort of pushing us away from a rate cut are, well, inflation coming back down a little bit. The last CPI report was good. That, not great. When you're cheering for a rate cut, job numbers that came out on Friday. We added like 54,000 jobs. Unemployment down to 6.5%. It was at one point up at 7.1. So things are just looking much better on the economy front. If that's not enough, well, GDP came in stronger than expected. So overall, the economy is running pretty good, and it's not a good thing. So the rate cut, I don't even know what the odds are, but I will tell you, I would say there's about a 90% chance that we are not getting a rate cut this time around. Maybe, unless well, unless Tiff Macklin gets visited by 3 ghosts and they convince him to do the Christmassy thing and give everybody a gift. But other than that, I don't think we're getting one. I don't think we're getting one. All right. The other little piece of interesting news that I did want to just touch on before we jump into chat here is, well, the CRA. The CRA is starting to look at your crypto. So this is something kind of new. The CRA has they haven't really done a lot. They haven't done a lot when it comes to crypto, the crypto that you're holding, making sure that you're paying your taxes, but that's all changing. So they now have a team. The CRA has a team they're looking at your crypto. They're looking at your crypto. They're looking to make sure you pay your taxes. So if you are holding Bitcoin, like maybe you've got it over there on Shakepay, well, here's the good news. If you haven't sold it, you got nothing to worry about. But when it was up there at 120K, if you went and sold it, took some profits, half of that is taxable. So it is considered capital gains. And they're actually looking through the different exchanges to see what people are doing. So be careful to pay your taxes, guys. Just pay your taxes. Yeah, there's nothing else I can say other than that they are looking, so don't get surprised if you are one of those people who have been taking crypto capital gains and not reporting. Just don't be surprised if you get a letter from the government, because they are looking. They're sorting through a bunch of people now. I don't know, they're probably looking at the people who have made a lot of the big ones. Like if you made a couple small ones, they're probably not going to look at you, though you should still claim that, but I think you're probably safe. But they are looking, guys. So be careful. Be careful. All right. Whew. Let's hit the chat. We're starting off today with the good old Jonathan. Am I late for the week that was this week? You are not late. You are you were 55 minutes early when you made that post. But you could be early and late. So if you made that post and then you went off to do something and you haven't gotten back by the time the stream started, then you could be late, I guess. Claude says, hello, Candace. Don't forget the bell. There's no bell on Sunday. I'm allowed to forget the bell today. But yeah, guys, if you missed the market close on Friday, oh boy, I was 10 minutes late. I was 10 minutes late on the bell. That's terrible. I won't be late on Monday. I won't be late on Monday. And guys, also in case you didn't know, we are doing a the Financial Express. That's what we're calling it. So our financial train has left the depot last week, and every single market close is a potential stop. So we have a normal market close on Wednesday that we do. So that one's fine, but we've been giving opportunities for people to add market closes. In fact, a market close has already been added on Monday, and tomorrow, we'll open up and we'll give you guys a chance to add Tuesday. But honestly, if one of you comes out and says, I just want to do it right now, here's your bunch of gifted subs, fine. We'd add Tuesday. I'm pretty lenient, guys. I do gotta say, after doing a full week of market closes, I kind of enjoyed it. It was kind of nice. And it was also kind of, I don't know, it was like we had a journey. It was like a journey. So I'm looking at a lot of things. As you guys know, we're heading into 2026, and I don't like to make big channel changes until we start a new year. So obviously I'm evaluating a bunch of stuff for next year, and I'll let you guys know what changes are going to be made. Nothing has been made yet by any means. But if you are a channel member, watch out. I'm actually working on a survey. I want to drop a survey out to the channel members to get some of your feedback that will sort of help me guide as we evolve the channel more and more. And as we grow, the evolution of the channel, of course, is a normal thing. So I'm looking forward to it. It's a good thing. It's a good thing. I just want to keep knocking quality up. That's the thing. Let's push the quality higher. Let's see, let's see where 2026 takes us. Stan is in the house with a hello all. Why, hello, Stan. How are you? Uh-oh. I have to stretch really far. I left my my coffee way over at the other end of the desk, but I got it now. I got it. It's gingerbread flavored this time around, so pretty good. And it's cold. Not the coffee. Not the coffee. Coffee's warm. It's darn cold in the east. Those of you who are in the east right now, oh boy. It is absolutely frigid. Absolutely frigid. So let's oh, I just noticed something. We got some action. We got some action happening here. We got a super chat coming in from Scratch. Last week was fun. Let's have a show on Tuesday. I want a show on Tuesday. I want a show on Tuesday. I thoroughly enjoyed. Now, don't worry, I'm not forgetting. Scratch is our first GOAT, greatest of all times. In case you haven't heard what that stands for, it's an awesome thing. It's something the kids all came up with, I think, but I like it, and I like the GOAT. I like making little GOAT videos, so. Well, technically, AI made the videos. I just told it what to do. But nonetheless, yeah, absolutely. Thank you very much, Scratch. Yeah, you know what, guys? I will open up. I'll open up Tuesday, no matter what. If we do get 4 supers today, we'll open up the Tuesday market close. If we don't today, you'll have an opportunity to do it tomorrow. So. It's all good. I like I said, I'm pretty flexible. I'm pretty flexible for sure. All right, Brian. Let's see. I wake up this morning, check ETH, see it's down $100. Say to myself, oh, it's gonna be one of those days. Check at noon, and it's up $200. The person really needs to close their eyes and ride the roller coaster. Yeah. I mean, that's the volatility of crypto. It is up, it is down. In fact, guys, just 1 second. I'm going to pull that over a tiny bit. There we go. Let's actually take a quick look. Let's take a quick look and see this roller coaster that Brian is talking about. We'll actually go to Ethereum. There we go. Let's go to Ethereum. Oh boy. Yeah, look at this, guys. Here it is. Here is the roller coaster. There's the morning when Brian checked. Here's the afternoon when Brian got a nice surprise. So down and up for sure. I don't know what happened. Obviously, Bitcoin probably did a similar thing. And let's take a look. Yeah, look, Bitcoin did the same thing. So something caused Bitcoin to drop down to 87, and then it rebounded right back. So that happens. That absolutely happens for sure. All right. We have Lisa in the house with a good afternoon, everyone. And Scratch says good afternoon, Mountaineers. And happy Sunday to all from Biz Markie. Kevin Kess, good afternoon, gang. Joe Smythe, happy Sunday, snow day, everyone. It's actually snowing here. It's a light snow. I think we're only getting a couple of centimeters, but nonetheless, like I said, it's been cold. This morning, I think it was around -17 wind chill, so that's never fun. Chad is watching from Saskatchewan. Ivan says, happy weekend. Chad says, my Bell is actually doing better than TELUS. Sick and tired of holding these bags. Yes, I know Chad's waiting to get out of the Bell. Oh, and that's the subscriber sponsored thing that someone requested we bring back today. Niece. Oh, welcome back, Niece. I haven't seen you in a few weeks. Hey, hope you are all having a great day. I am upset about that they stopped Split Share 2, Swedish Finance Institute, because of EU rules. The rules are to protect the investors. Uh-oh. Uh-oh. So they're not letting you guys hold split core. Now, I will point out, split core is, it's a uniquely Canadian invention. So I don't even know if any countries are offering split cores outside of Canada. But yeah, that's terrible that they're doing that. But I understand that they're probably trying to protect investors, and it might be that they don't understand split core and they might seem a little bit confusing maybe, but that's too bad. King of Day says, hello, everyone. Happy Sunday. Brian says, good afternoon, everyone. Scratch, we are entering a 40-year inflationary cycle. Well, we've been off to a good start, that's for sure. No rate cut this Wednesday, says Wayne. I agree 100%. 100, uh-oh. I see something. I see something. We got Martin. Martin's in with 5 Mountain Finance gifted memberships. So guys, Tuesday show's in the bag. Tuesday show is in the bag. So we will have market closes Monday, Tuesday, and Wednesday. And we'll figure out Thursday on Wednesday. But thank you, Martin. And I actually have to look to the side to see who won some memberships. So we got Sue Silver, we got John, we have Senna, we have Fakey Fake. Don't know who Fakey Fake is, but we got Jonathan and Roku. Roku in Stittsville. Awesome. I love it. I love it. All right. And can't forget, Martin, you are a huge goat. You're a huge, great goat. You're a good goat. Fantastic. That's awesome. That is awesome. All right, let's go back to the big screen and let me try to find where I am. Right up here. We were just talking to Wayne. King of Day. Sold my TD a while back for a profit, of course. Couldn't trust them anymore due to the money laundering issue. Yeah. A lot of people lost trust in TD during that. But you know what's amazing to me? A lot of people forgot about that pretty darn fast after it's all been taken care of. And, I like that it highlighted some of the issues with banking. And I hope after what TD has been through that we don't run into these type of scandals anymore. We probably will, but I hope we don't. Mary is in the house. Mary's our official captain of the like button. So guys, if you haven't hit that button yet, it's time. Just go down, click it. I'll have some coffee while you guys are busy doing that. Gosh, so good. So good. Chad says, but on the flip side of crypto profit, can you claim the 50% loss in capital gains? Yeah. If you have taken it at a loss, you can. Now, I will tell you with crypto, guys, unless there's extenuating circumstances, I would never take, I wouldn't want to take crypto. I wouldn't want to take a loss. Like take Bitcoin. We know it's going back up. You know it's going back up. Unless you have a situation where you have absolutely no choice, I would leave it in there. And if anything, I would be doubling down personally. But I know that there are some of you out there that are like, yeah, nope, crypto's a scam. If you're one of those folks, you probably don't even hold any. So I wouldn't be super worried in that situation. But yeah, I would not. I'll modify that a little bit. If you're deep in the green, like if you're up at the top of a crypto cycle or a Bitcoin cycle and it starts to fall, yeah, there's nothing wrong with selling it then. And then, a lot of the institutional, let's not even go institutional. A lot of the whales. So whale is somebody who owns a lot of Bitcoin. A lot of them will sell some of their Bitcoin positions at the top. And what do? They wait for it to fall and they buy it back. So they end up turning, let's say you sold 10 Bitcoin at the top. You might be able to buy, well, maybe, depending on how far it falls, maybe you can buy 11 back in when it crashes. It's a way to basically make more money. It's actually kind of a form of swing trading if you think about it. Lisa says, I haven't sold any of my Bitcoin yet? If I do, how do I go about claiming a capital gain on my taxes? Will Shakepay issue a tax slip? I don't think they will. I don't think they're going to issue you as far as I know, I don't think they'll issue you a tax slip. I think you're going to manually have to do it. So when you're doing your taxes, there is forms that you can fill out for money that you've received. Now, I think, and maybe this has changed because I haven't had money on Shakepay in a while that I've pulled off, but I think they should. And I think if the CRA is starting to crack down, I wouldn't be surprised if in the future they start doing it if they haven't already. Now, let me ask, any of you who are using Shakepay and holding Shakepay and maybe have been taking stuff off, have you been getting any tax information from them? Now, I know the last time I had to do it for Shakepay, I had to pull off all of the transactions, and there were so many because I was doing all of the shaking. So I ended up then importing it all into Coinly, but I entered everything manually. So what can I say? Brian, Mary's here. I need to hit the like button. Absolutely. Jonan says, hi, Candace. Happy Sunday. Well, I hope you're having a good day as well. How did the 9-point webinar go yesterday? Okay, so yeah. I don't know how many of you guys actually went to the webinar. I'm kind of curious. So I was there. I was listening in. They covered quite a bit of things. They did go over a little bit of the some of the common myths around things like covered calls and leverage, and I for the most part, yeah, I thought it was some pretty good information. It was geared for do-it-yourself investors, and I also felt it was geared for people who were a little bit newer. One of the things I think that I love that they went over is they were talking a little bit about the difference between at the money and out of the money, and how that translates into the upside on that cover call. And I was like, that's good information. I'm glad they covered that. So I thought it was good. If I had any complaints, there was just a tiny part in the beginning where I thought that the sound kind of glitched a bit. I don't know if it was just me, but I thought it was a pretty good presentation. So I definitely enjoyed it. And I think a lot of you may have got something out of it. If you did watch it, did you like it? Did you learn anything? To me, that's the important question. Did you learn anything? All right, let's jump over here to Roku. Happy snowy Sunday all. Just in from shoveling. Uh-oh. Yeah, I was looking at a graphic on the Weather Network earlier today. And apparently, so far this winter over here in Ottawa, we've had 53 centimeters of snow. I looked at it, I'm like, what? Really? Now, most of it has melted away, so there's not a lot on the ground right now. But then I started thinking, you know what? It has snowed here and there quite a bit. So yeah, we're having a pretty snowy winter so far. And in fact, Wednesday we got another 10 centimeters coming. So we might just have a white Christmas at this rate. Well, now, will we have a perfect Christmas? I don't know. And for those of you who don't know, the difference between a white Christmas and a perfect Christmas is a white Christmas, basically if you got a couple of centimeters of snow on the ground, that's considered a white Christmas. But if you got a couple of centimeters on the ground and it's snowing Christmas morning, that's what's considered a perfect Christmas. So we'll have to see. It's too far out yet to determine whether that's a possibility. But also, the other thing too is the cold that has been hitting us now. It's basically because the Gulf Stream, not the Gulf Stream, but the jet stream has pushed down towards the Gulf. In fact, they've been getting frost in northern Florida as a result of this. So they are expecting that to start moving back up north. So we might get a little bit milder of the second half of December, but we'll see. Anything can happen when you're dealing with the weather, that's for sure. Chad says, King a day, every bank does it, just TD got greasy and sloppy and got caught. Or greedy. Okay. Light snow, but the roads are crap. Yikes. Yikes, yikes, yikes. Jonathan, you're not late. All right. Welcome, members. And let's see, Morley says, good afternoon from rainy Vancouver Island. Ah, yes. Oh, and guys, there was a big earthquake in Canada last night. A 7.0. Now, it was about 200 kilometers west of Whitehorse. So it was actually very, very close to the border with Alaska. But it was on, the epicenter was on Canadian soil. So it's actually one of the largest earthquakes in recorded Canadian history. So interesting. Thanks, Martin, says Roku. Can I re-gift? I don't think you can. I think you win, you got to keep it. But yeah, I mean, that'd be kind of cool. It's one of the things I find with channel memberships. So when it comes to gifting channel memberships, YouTube doesn't give you a lot of options, unfortunately. So, like for example, if like Mary is always in there trying to encourage people to to hit that like button. So if I wanted to gift one to Mary, I don't even have that option. I can do a random gifting. That's all, the only option that you have. Or if you want to, like, let's say if a Gursky is like, I really want Chad to have a membership. Nothing Gursky can do. Random, maybe it'll land on Chad, but I mean, odds are not that it won't. Although, I think there was one time, and I can't remember who it was. Somebody was trying to talk about, wanted a membership, and Jill actually gifted one just to see what would happen, and it happened to land on that person. It was absolute fluke, but that was a while back. Chad says, yeah, when I use the crypto loss against my personal account gains. All right. Lisa says, thanks, Candace. That sounds like a real pain in the butt. It is. Absolutely. Well, it's not so much a pain for me because, like, everything I make on YouTube, I have to do the exact same thing because I don't get a T4 from YouTube or from Google. I have to pretty much just count it all up and basically fill out a form. And yeah, it's taxes. But because this is considered a personal business, I have an extra month to do my taxes. So I don't have to. I think it's like my date is like June 1st or something. I don't know. Whatever your date is, I'm a month after. Not to say that I usually wait that long. I do my taxes right away. I just rather get it done and over with. All right, Gursky says hello, happy Sunday, fun day, everybody. Me not want to sell. I hear ya. Anchor Tours says, I was on the 9-point seminar. The rebroadcast is on their website. Okay, there you go. So if anybody still wants to see it, and I actually, you know what? I didn't think I would have to drop this anymore. I'm dropping it. So the link I just dropped, it will actually just take you straight into their website. If you still want to watch it, yeah, it's an option. Hipple says, oh, almost missed out. Hey, everyone. Good to see you. Larry's in the house. Monroe Doctrine being reinforced. South America belongs to the USA with planned influence spheres for other continents later. Oh, boy. Yeah. And it's funny. Like, one of the things I've noticed with Donald Trump is he'll find legislation from way, way back. And he'll use it to justify moves that he's making now. But yeah, oh boy. Let's see. Claude says, a guest on BNN said below 25% gains, it was not worth selling in a non-registered account. I don't get it. It's only the profit that's taxed, right? Whether small or big, no difference in my opinion. Yeah, so basically, now, whatever you're selling, if you're selling it through capital gains, yeah, 50% of it is going to be taxable. So it doesn't matter how big it is. it's still 50%. I mean, 50% is the same as 50% of any size. So yeah, I don't see why they would say that. I guess maybe I need to see some more context on what they were talking about, but yeah, there shouldn't be any difference with that. And it shouldn't matter. I mean, if you want to take your capital gains, now maybe they're thinking that, I don't know if they're thinking, I don't know what they're thinking. I'm not even going to guess. I won't guess. Let's see. King of Day says, I hate the snow, I hate the cold, but I love this country, won't change it for anywhere else on earth. Yeah, and I mean, if you really hate the cold, that's what we got Vancouver for. Not to say you won't get cold in Vancouver, not to say you won't get snow in Vancouver, but you can get years where there is nothing but rain through the winter. But there are exceptions for sure. Andrew says, I'm thinking of doing some yard work in South Vancouver Island. It's beautiful out. Oh, there we go. I'm not thinking of doing any yard work. It hasn't even crossed my mind today. Claude, Roku did not receive a membership. The five that had are just before him. Roku is the 6th in chat, but did not win. Oh, really? Okay. All right. Oh, well, okay. Roku got blended in. All right. Sorry, Roku. It looked, but mind you, I was reading off on a small little laptop screen over on the side. So, okay. Let's see. I didn't realize that the gifted memberships were random. I've been gifted a couple and thought it was given specifically to me. Yeah, no, it's, sorry, Lisa. Yeah, it's 100% random. It's 100% random. Now, Twitch. So for those of you familiar with Twitch, Twitch has a membership there where you can actually go in and choose a person. I want to see that come to YouTube. I want to see that come to YouTube because then, if you're very, very active and, I want to reward you, I can. I would, I'd like to have that option. Because, sometimes, if I'm going to just throw out a random membership, sometimes it could go to a bot that's just been hanging out in the channel. It can go to anyone. Now, the algorithm is supposed to give preference to people who are more active. It's supposed to. Sometimes I see that and sometimes I don't. So I'm not 100% sure how it works. And I also don't know how it calculates activity because obviously lurkers win. So, they're not chatting all the time, but maybe it gives a slightly more preference to you if you're posting messages and things like that, because a lot of people who do win are a lot of the regulars. So, I'm not 100% sure how it works. I wish I knew. I wish I had exact answers to that. Larry says foreign nations, industry, and development systems to be kicked out of South America. And you see, look, Roku says I got a message that I won. I want a regift because I won last week. So maybe there was a slight glitch because I swear when I looked over on the screen here, it showed Roku as a winner. So if Roku received a message as well, that's kind of strange, I don't know what happened there, but, well, let's see. Mary says, where would you invest money rather than T-Cash? Okay, so we're thinking about if you are looking to preserve some cash. It's a good question. I think most of these cash ETFs that we've liked in the past, most of their interest rates have come down a wee bit. So you got T-Cash, you got cash. I think PDA, is it PDA? I think it's, or PS. I don't know. There's a purpose one as well, which it might be PSA. I think it's PSA. There's a whole bunch. So it sort of boils down to, if you're holding on to it, you want to be able to access it fast. So for example, to be able to sell it and buy something, you're kind of limited to some of those. Or, I mean, you could also look at something blue chip. I mean, technically you could put it in something blue chip and you're probably going to be fine, but you're not 100% guaranteed because of the fluidity of the market. So I mean, right now I'm still using Tcash, but I did actually, if you watch the 0 to 100K challenge, I did actually sell one of those shares because I was in the middle of, of buying, and I was a little short to get another share, and I was like, yeah, I'll just sell one of these Tcash. Let's do it. Let's get some money flowing. But yeah, so those are kind of those ones. And if anybody knows of one that has a higher interest rate than Tcash or that seems to be doing better, drop it in the chat because I would love to know about it too. Ian says, I'm going to be late filing this year. I don't want to deal with it until you're home. Okay, that's fair enough. I think the Nightbot pulled the first part of my message. Maybe. Yeah, because there's the Nightbot. Oh, Nightbot. Don't steal messages, Nightbot. Roku says, wait, no, I didn't. Oh, okay. There was just confusion. There was confusion. What can I say? Niece says, I like to invest in monthly dividend companies, and in EU we only have a few, so that's why I like Canada. And because of my Canadian friends, but it's so frustrating to not be able to invest in the funds you have. Yeah, no, I would agree 100%. Yeah, that's kind of, that to me is kind of crazy a little bit. But, you know, that's the problem, is that sometimes you have regulatory bodies that are going to restrict you in one way or another when you're looking at foreign investments. I don't like it either. But it does happen. It does happen. Morley says, Candace, what do you think would be better for a new oil gas ETF starting for the new year, ENCL or XEG? All right, that's a great question. That's actually a really good question. So I actually hold both. I hold both in the 0 to 100K challenge. So XEG, that's the iShares Capped Energy Index. So what I like about that is, one, you know, it's not using any covered calls. It's not using any tricks or anything to make income. It's basically, you get a small amount of dividend, but you're going to get all of that upside with it. So I do like it for that reason. Now with ENCL, obviously we got a lot of similar stocks. We probably have a little bit of an overlap, but you are getting covered calls. You are getting leverage in there. Here's the thing. If oil's flat in 2026 and doesn't really do much, ENCL will probably make more total return than XEG. If we have a very, let's say, gradual increase, ENCL will probably make more than XEG. But if oil explodes in 2026, and if we get it zooming back up to, let's say, $100 a barrel, XEG will probably win when it comes to the total return. And that's all because of the capped upside potential. Now, with ENCL, obviously the leverage will make it a little bit better. So if we have that explosive year in 2026, so if you look at the other version, so ENCC that doesn't have the leverage, it'll be even further behind XEG. ENCL will be closer, and if you're reinvesting those dividends, it'll be really close. But XEG will still win. Now, also keep in mind, when I say explosive, the higher the explosive, the better and the more distance XEG will get because of that capped upside potential. It's part of the structure of some of these income funds. Rory says, hello, everyone. Brian says, your message was just under the list of winners. Okay, all right, so there we go. He didn't win, but he's still a winner in my book. Let's go with that. Claude says, you shall not win. I don't have a staff to slam down, though, Claude. Now it's like, Candace, why don't you have a staff? I don't know. It's never crossed my mind to buy one. Brian says, Wealthsimple, there we go. Wealthsimple was saying something about cash accounts just the other day. Up to 4%, 3.75. I need to pay attention sometimes to their offers. And that might be a limited time offer, Brian, but yeah, I mean, I would certainly look at it. Even if it was a limited time offer, it may not be a bad thing to move something into that for that amount of time at least. If you're going to get more, I'm always good with getting more. But always read the fine print, because sometimes it might say that you need to have it in there for a specific amount of time too. So let's see. Andrew says, I'm thinking of filing with Wealthsimple. Have you ever tried their tax software? I have. I have. In fact, I did my taxes in a video 1 year on the channel. I can't remember. It was probably 3 years ago, maybe, to demonstrate their tax software. But I find it very easy. And if you are using Wealthsimple for the core amount of your investments, they make it super easy because they will just import everything from Wealthsimple, and there you go. All of that work is done. Just bang. So yeah, no, their software is pretty good. You also get to choose how much you pay. So that's kind of a neat little thing. At the end, it's like you have the option of paying nothing if you don't want to. But if you pay, they've got a couple of tiers, I think, and you get a bit of extra benefits. Like if you need to talk to, for example, a professional to help you, they have a tier for that. And I think there's also a tier like if you need revisions, they have a tier for that as well. But if it's fairly straightforward, and you really don't have to pay anything if you don't want to. JE says, I switched cash to HHL since it has been down. If you could catch it at $7, it is a good entry with 9% yield. Okay, all right, fair enough. Tom says, although it's a U.S. holding, EFAA has a nice 8% return and it's fairly stable to hold cash. That's not too bad. Other than if you don't have a U.S. account, that's that one problem, because you still have to deal with the currency conversion or some of the conversion fees, unfortunately. Rory says, just invest in loser coin. Oh, not loser coin again. And guys, if you missed it, so on the market closes, one of the things I like to do is we like to make fun of some altcoin, some obscure altcoin. We pull one up. And the other day we pulled up a loser coin, and it's now, I don't think we're ever going to stop talking about loser coin. But on Friday, we actually followed the breadcrumbs to see where you could get loser coin. And when we went to their website, it wasn't even in operation anymore. I was just like, oh boy, this is a class act. But yeah, loser coin, it lives up to the name. It lives up to the name. Brian says, okay, read it again. Wealthsimple says 2.5% in their moneymaker portfolio. Can pull it anytime. Okay, yeah, 2.5. Yeah, I think that's more standard right there. Gandalf has an old walking stick +3. Nice. Love that. All right, and I just noticed something in here. Wahipple has gifted a Mountain Finance membership. So guys, that means we got another goat. We already got market closes on Monday and Tuesday, but thank you very much, Wahipple. And who won that one? Let me see if I can see. Tom Smith. Congratulations. And Tom is active. I love it. That's one of the things I love, is when it goes to somebody who's active, I'm like, yay. Or there's a few lurkers I know. I know a couple of our lurkers, and always happy to see them. I usually don't see them in the chat, but I do see them occasionally on the videos. Let's see here. Whoops. I was about to go from the Wahipple, and then I would have accidentally skipped Scratch, and I don't want to skip Scratch. Let's see. Oil is a falling wedge since 2022. 2020 was wave 1. 2022 to 2024 is wave 2. Best time to invest for wave 3. Yeah, I know oil has had a rough run of it for sure, but I feel by the end of 2026 we're going to get some recovery. Will it happen immediately? I don't know. Honestly, I don't. But I do have that feeling that we might start to see some recovery this year coming up. And I will be. Oh, and let's talk. We'll talk a little bit more about the end of the year here in a moment or so. Give you guys some expectations because we got a whole bunch of different things that we do towards the end of the year, and they're mostly all fun. They're mostly all fun. All right. Larry says, cool. New 3-year COVID study, 40K in study, 20 months after COVID immune system till 72.9% lower than before getting it. Still, okay, yeah. It's funny. I actually didn't get a COVID booster this year. I know last year. It's funny. Last year I went out and I got a COVID booster and I got a flu booster and then I came home and within a week I had the flu. I was like, what? It wasn't fun. It wasn't fun. Let's see. Shapa says, I am. Let's see. Chad says, I like my women like COVID-19. Oh, I'm not going to read that, Chad. This is a family-friendly show. It's not like kids actually are interested in finance, but nonetheless, I'm not reading that. I'm not reading that. You guys can read that on your own. Oh boy. Sorry if I offended anybody. Couldn't resist. Okay, no problem. I should have just read it a little bit. Why? As soon as I saw where we were going, I stopped. But hey, what can I say? Larry wasn't offended. You're a man of culture, Chad. Let's see. Tom Smith, take a look at the U.S. weekly dividend ETFs. All my funds are in them. Nice. And Tom is thanking Wahipple for the gift, the membership. Chad is lonely. See, just like to laugh. You know what? I think everybody likes to laugh. It's and also, well, I like to laugh, and I like those two coffee. Now, if I had to choose between laughter and coffee, I don't think I could choose. I don't think I could choose. Rory says, give him a monkey or something. Let's see, never lonely. Give Chad the beaver. Let's see, are you on Blossom, Wayne? Yeah. Oh, guys, speaking of Blossom, you know what? You guys brought it up. So if you're not yet on Blossom, there is a link if you want to check it out. It's a social media app designed for investors. It's pretty cool. I'm over there. If you do sign up, be sure to follow me. I'll follow you right back because I don't look at the normal feed. I just look at the feed of the people I'm following, which is you guys. No, well, maybe even more than you guys. I think I'm following about 1,000 people, but that's the feed I look because if I'm going to reply to somebody or comment on somebody, I'd rather be commenting to Chad than Harvey Hump Scruncher. So simple as that. All right. Wayne says, Tom Smoth? Okay. Oh man, we're getting kicked out. Who's getting kicked out? What's going on? I don't know. You should check it out, Wayne. Let's see. I was just on Trucker's live feed, so you can imagine the cussing. Yes. One of my first jobs at a university was collecting water samples. I was testing it for things like suspended solids, BOD, so that's biological oxygen demand, and a few other little things. But I used to have to go to a solid waste site to get my samples, and boy, some of the language around there, oh boy, yeah. Probably very similar to trucker language, I would assume. Wayne says, Tom Smith, I spent half the year in the U.S. They provide U.S. income. And Chad says, we got to drive the better half home. Stay invested, y'all. Maybe get a rodeo pie for supper. Or a Rodo's pie. I'm not even sure what a Rodo's pie is, but maybe it's good. Let's see. Nice. Good day, Chad. And King of Day. I used Wealthsimple and TurboTax last year side by side. Wealthsimple gives a better return, but TurboTax is a tiny bit easier to use. With Wealthsimple, you have to know what you have. Overall, Wealthsimple for the win. All right, there we go. There we go. All right. Come on, guys, don't get Candace banned. Family friendly, please. To be honest, that comment wouldn't get me banned. What will get me banned is if, I don't even know if I want to give you guys the blueprint. How to get Candace banned. No, if there were like threats of violence or something in the chat, or something just absolutely, absolutely inappropriate, that might do it. But for the most part, you guys are really, I don't think you guys have ever come close. We, you know, you guys are pretty good. You guys are pretty good for sure. Let's see. Brian says, I have used Studio Tax for the last 10 years. They are great. Save your info from the previous year on your computer only. They can retrieve your CRA file and do your taxes in under 2 minutes. Nice. I like fast. I like fast. Ian says, I use I used Wealthsimple Tax a few years ago. It worked fine. Got to gain access to my CRA account. Then I might do it again. H plus R was like $180. Oh boy. Yeah. That's the thing with me. Like, you know, when I was of that age that I had to start doing taxes, pretty much I you know, asked my mom about it, and it's like, oh, you just go to H&R Block. That's like, oh, great. And then they were charging, and I was like, okay, well, once I realized how much I was paying, because I used them for I think I used them 1 year, then I was like, let's just go and look at this myself. Let's pick up the thing at the post office, and it really, honestly, it wasn't hard. So I just went through that, filled it out, did my own taxes, and, you know, basically paid myself the $180. Andrew says, is there a way to add positions to Blossom without connecting my portfolio? Oh, there sure is. There sure is, Andrew. Here, let me show you. Let me show you. All right, let's pull it up. And here is Wealthsimple. I was on the leaderboard for a reason. You'll find out soon enough. All right. So, all right, we'll go from the home position here on Wealthsimple. So if you want to add your portfolio without, of course, connecting it. So you have a couple of options. So let me show you the options, first of all. So you go into portfolio, and here we got add investments. So when you click add investments, this is where you can connect your brokerage. So if your brokerage is here, for Canada, we got Wealthsimple, we got Quest Trade. So that's pretty much it. A lot of different places, a lot of different brokerages for the US. So you don't have to do this. So if you do it, though, let me assure you, it's only, they're basically getting read-only access. They can't make any changes to your account. Even if they wanted to, they can do nothing to your account. All they can have is read-only access. But if you are not in Wealthsimple and Quest Trade, or if you just like, you know what, I just want to be safe, let me do this manually. You just come to add investments manually, and quite literally, it'll bring this up. You will type in, you know, you'll select a stock. So these are stocks I already have. But let's say, for example, you wanted to add Enbridge. We'll just put in Enbridge here. Well, here you go. You click on Enbridge. How many shares do you have? Let's say you've got 212 shares of Enbridge. And this here is your adjusted cost base. How much, you know, what did you pay for it? Or, you know, just look at it in your broker. It'll tell you. So let's say, for example, and oh my God, if I don't actually know the price of Enbridge, but we're going to guess. We're just going to guess here. Oh boy, let's say $85.12. Like I said, I don't know the price of Enbridge. So maybe that it is, and then you select a brokerage. So by selecting a brokerage, it's just, you know, you could, I mean, you honestly, you could choose any brokerage, it doesn't matter. But in my case, I use National Bank. So I would just put in National Bank, and then I'd say, okay, yeah, it's in my TFSA. And then I'll hit save. All right, so now when we look at my holdings, you'll see Enbridge down here. It's taking up 36.73. Oh, it was a lot more. It was, but it's, yeah, it's taking up a big chunk, Actually, I think I went high. Let's pull up Enbridge for a second here. Enbridge, average price, 85.12. That's my average price. Where is Enbridge at? 66.58. So I overshot. I paid way too much. I guess somebody's out there trying to find me to sell me some swampland in Florida. But yeah, anyway, what I'm going to do now is, because this is not in my portfolio, guys, I'm going to get rid of it. And to get rid of it, once again, I just go to Edit Portfolio. In this case here, I go to Enbridge. I just come down and I just delete holding and delete. Boom, Enbridge is gone. It's now removed. But that's how easy it is. Now, you just add them in. And that's why I say, like, for example, if you want me to look at your portfolio on the air, and I don't mind doing that, just make sure, one, that you're following me over there on Blossom. Make sure you've got, you've entered your portfolio in here, or at least enter the stocks you want me to comment on, or ETFs, and send me a quick message. Send me a message to let me know, because I don't want to do it. I mean, I will do it blind, but if you want a better experience from it, it's nice if I know ahead of time, because then if you've got a stock in there that I've never heard of, I can at least look at it ahead of time. Maybe I might want to dig into just a couple things so I know a little bit more about it. But yeah, it makes it a little bit better. But yeah, anyway, that's how you do it. That's how you do it. It's very, very, very simple. All right. A Curious QQ says, good afternoon, everyone. Another investment learning session. Well, welcome. Welcome to the head of the class. There we go. Scott Evil says, I had to Google Rod's. It's a pizza place. Ah, ha, ha. There we go. So Rodo's is a pizza place. All right. Kind of cool. Brian, studio tax was pay what you want before, even free. I would give them $20. Now they charge $15.95, so they lose money from me. Certain income levels are free. Yeah, some of them, like I know, oh my God, what are the big ones? Some of the bigger ones, if you made a little, and it goes on last year, I think it goes on last year's return. I think if you made under a certain amount, or does it go on the current one? It might go on the current one. I don't know. But I know that a lot of them are like that. If you make under a certain threshold, they don't charge you. And that's good. That's good. Like if you're low income, there's no need to make you pay, in my opinion, for sure. Gursky says, when the new year comes, are you going to add your new 7,000 contribution, or are you planning on spreading it out for the year in case of better price opportunities? That's always the neat little thing, right? And this really depends. Like, if you're at a point where if your TFSA is full and you're getting that 7,000, also keep in mind, guys, if you pulled anything out of your TFSA, you're going to get that back too. So if you're one of the income investors who's using that, so if you've retired and you're using that income coming out, well, all of that income, whatever it is, you're getting that space back too. So let's say you pulled $5,000 in income out of the in dividends out of your TFSA. Now you have to actually take it out though. If you took it out, then you'll get your 7,000 back plus that 5,000. So that's kind of the neat little thing. Now with my TFSA right now, my TFSA is not close to full. Like my TFSA right now is, well, it's the 0 to 100K challenge. So that's what's currently sitting in my TFSA, and there's plenty of room for sure. Yeah, most of the money that I have is in investing accounts, because I've got like a swing trading account, and the channel members. This, by the way, guys, and those of you who got a channel membership today, you get to see my swing trades. I like to post my swing trades in there, so I do have a pretty sizable swing trade account. And part of the reason that it's big is that, well, I don't like to use margin. I would prefer to just use the account. So, and it's kind of funny. It's like, it's tempting. Like if you need money, oh, let's just pull it from the swing trade account. It's like, nope. All right. Paul says, good afternoon. Brian says, my daughter has opened a FHSA. So there's your first home savings account. So in Wealthsimple, she is splitting 50-50 between self-directed and managed portfolio. She is playing it safe with her portion, buying QCN and XEQT. Good choices for her. Yeah, and this is the thing, guys. There's many ways to invest. So if you've got a long runway, I will usually sure, I love income growth. So, sorry, growth income. I love growth income as an investment form, which is your hybrid form. But at the same time, if somebody is young and they're like, all I'm trying to do is grow things, it always boils down to total return. And if they want hands off, then it's usually ETFs. And in that case, so a good total return stock right now, cover call one, is like HDIV. But if you are looking for, let's say, for example, you want to throw something into an RESP for your kids and you really don't want to have to do a lot of maintenance, well, I would probably lean towards something a little more passive, something like a VFV instead, just because of the fact that HDIV is doing fantastic now, but we've not yet seen how HDIV is going to perform in a bear market. I think it'll still be fine. But nonetheless, I always like safety. I like safety when it comes to things like, especially when it comes to your kids' education. Play it safe. I think HDIV is safe, but I know VFV is safe. So there's a difference, right? I think or I know. So I kind of boil it that way. I just realized that with my head down low here, let's go big again. It's like my head's behind Brian's box. That's hilarious. Claude says, my resolution for 2026, reduce the amount of stocks I have by half. I have way too much. Not a bad resolution. So, when you look at some of the famous investors, people like Warren Buffett, I mean, he doesn't have a lot of stocks. He really doesn't. And one of the things that he always says is that you shouldn't really invest in things you don't understand. So that can make sense. And the big thing is, though, is if you are reducing the number of stocks, and I have no clue how many stocks you have right now, that's when you want to start looking at, okay, what are my best options to still maintain some diversification? So you always want to be kind of a little careful that you maintain a certain amount of diversification as you whittle down your total number. And in some cases, that's where having, like, some people will be like, okay, well, let's just have a little bit of a core, an ETF, something like VFV in the background here, that is giving me that full diversification of the S&P 500, or like an XEQT. You're getting a world diversification with that. So that's not a bad thing as well. I always look at it that way. So anyway, let's move on to Brian. You don't want to see how many I hold. Rory says, I have 14 total holdings, so pretty small. Let's see. Brian says, I wish I am 71 stocks ETF. That's a lot. That is a lot, Brian, for sure. And this is the thing. If I always look at it with the time. Like, if you have the time to properly manage the portfolio that you have, that makes a difference. If you don't have the time, then you really want to start looking at, what can you hold that you can manage in the amount of time that you have. And that's where you get into some of those set and forget type stocks for sure, or ETFs. All right, 80% are dividend paying. Let's see, must be fun on dividend day. Which broker do you use for swing trades? National Bank. Now, there are a lot of different brokers that you can use. I almost switched actually over to Desjardins, their direct brokerage, because they have a lot more features. They have a trailing stop loss, for example. But the problem was, and this is the problem I had, and maybe I'm just an idiot, I'm not sure, but I found that they had too many features. And I found that it was harder to make trades fast. So if I see something and I'm like, I need to take advantage of this now, it takes me, it might take me 30 seconds to a minute to get through the screens to be able to get my order in. Whereas with National Bank, I see something I need to act now, I can do it in like 5 seconds. So that was kind of the big thing for me. So I ended up saying no to Desjardins direct brokerage for that very reason. So National Bank, I like the fact that I can move quickly. That's what it boils down to. Wealthsimple, I can't. Anything on a tablet, I can't. And Wealthsimple's their desktop app is not the best. Now, I heard rumors that they're planning to improve it, but until they do, right now, National Bank, in my opinion, from the ones I've used, because obviously I haven't used everything, is nice and quick. And the fact that it also has zero commissions makes it ideal for sure. All right, and we got the Nightbot again. Now, one of you guys requested I turn that on today, so I'm gonna leave that be. I'll leave it be. Brian says blame Evolve, Hamilton, and Harvest for a lot of new ETFs. Yes and no. Yes and no. The big thing is, and this is, I guess, Canadian investors they've been moving to ETFs in droves. So the popularity of ETFs is more than it has ever been, and they keep getting more and more popular. And I keep running into reports saying this is a new month, all-time high interest in ETFs. So the interest is there. If the interest is there, the investors are there. What are you going to do as a good business like Evolve or Hamilton or Harvest? You're gonna bring out some new ETFs, and plus, obviously there's a lot of people who want that semi-monthly payouts as well. So a lot of the newer ones you're seeing, the semi, like Sixy has, pays you twice a month. Biggie pays you twice a month. So I think if anything, I think that's going to be more of a trend, and I think we're going to see. If you think we saw a lot of new ones in 2025, I would not be surprised if 2026 beats 2025. So anyway, get used to new ones. Get used to new ones for sure. Scott says, if I buy a stock in non-registered and transfer in kind to my TFSA, does the CRA consider that a sale in capital gains? Yep, it does. Absolutely. You have to sell it and transfer the money and buy it. That's basically what happens. So you can't just transfer. Unfortunately, you can't. I wish you could, though. Relaxing Rain says, Wealthsimple does tax info. Wealthsimple does tax info for sells and staking, but doesn't send it to the CRA. As when I did my taxes, that was the only info my accountant didn't have. Oh, that's interesting. Yeah. Because they are supposed to send it. Now, it might be that they send it to the CRA late. Because I know they make it available for you on their site. So if it is a T, one of the T forms of one shape or another, whether it be T5 or whatever, that will eventually get to the CRA. You know what I would do? Relaxing. I would go back now and look at last year's and see if it is there. See if it's there now, because I have a feeling maybe it is, but let me know. Let me know once you've checked. You don't have to check now, obviously, but let me know. Let me know when you do. Warren Buffett versus Peter Lynch. Interesting. I don't know. I like Warren Buffett better personally. Let's see, with crypto. You see, here's the thing. I haven't really done anything with crypto on Wealthsimple, so that's interesting. Rory says Charlie Munger was a favorite. Yeah, Charlie. I mean, it's so sad that we don't have Warren Buffett and Charlie Munger together anymore. And soon enough, I mean, Warren Buffett will be retiring, so he'll be kind of stepping out of the limelight as well. But nonetheless, yeah, they were a good pair for sure. I didn't agree with everything they said, but I think the general logic of their investing philosophies were very, very good. A lot of lessons there. Scratch. I have the free version of BNCD and Disnat, and I would never recommend Disnat over BNCB, but it's the free version and I am not trading. Okay, fair enough. And I have not tried either of those. Let's see here. Brian says, my name is Brian. I have an ETF problem. Admitting, Brian, is the first step. To what? I'm not sure. And having an ETF problem may not always be a bad thing. So, no. Rory says, top drawer. Let's see here. Scratch, I watch Rule 1 investing as well with Phil Tom. All right. Cowboy is in the house. Hopefully all your power stuff is finally done with Cowboy. Peter Lynch had tons of stocks. Scott says, Scotia iTrade allows a transfer without selling, so it's a bit confusing. Well, that's interesting. That is really, really interesting. See, my understanding, and maybe there's a loophole that I'm unaware of, but my understanding is you normally would have to sell it, move the money over, and buy it. So that I might have to look into that, Scott. I might have to look into that for sure. That's interesting. That's very interesting. Ian, when I tell people I'm living on covered call dividends, I worry they think I'm talking about the crazy super high yield ones. Um, I think most people, when you say I'm living on covered call dividends, they're probably wondering what you're even talking about. To be honest, Ian, I think. But yeah, I mean, yeah, there are of course the super high yield ones, but Ian, you're a smart investor, so I know that you're not talking about. You're not sitting there with a whole basket of yield max. Let's see, Charles Schwab. Doorpat is in the house with a happy Sunday, y'all. Cover call, my limit is 15%. Yeah, and I'll tell you something, guys. There is a video coming out. It's either Tuesday or Friday. I don't know which yet, simply because I have that interview with the guys from 9 Point. So depending on when that comes back from them, I'm expecting that one to be Friday. But if it comes back sooner, it might go in on Tuesday, and then this one will get bumped till Friday. But it's a really, really interesting. I love this video. I love this video that I scripted today. I think it's going to be interesting. And one of the things in this video, and I'm not telling you what it is yet. One of the things in this video is you can see that higher yield doesn't always translate into a higher total return. And in fact, some of the more moderate numbers are coming out with the larger total returns. But anyway, we'll talk a little bit more about. I'll probably talk about the video maybe in the market close. Yeah, I think I will. I'll tell you guys about it tomorrow afternoon. All right. Curious says, how about from TFSA to non-registered transfer in kind? Based on my research earlier, CRA also treats it as capital gain if the share has a higher price than when I bought it. Is this correct? Well, this is my understanding. So yeah, if you have a stock in your TFSA, now if you sell it, you're not going to get taxed on that. And if you move that money out and then you rebuy it in your non-registered, as far as I know, that should not create any kind of a situation like that. Shouldn't be a capital gain. However, oh gosh, yeah, and I see what you're talking about too, because it's kind of like if you do that in your non-registered, you sell it and then you rebuy it back in your TFSA at a loss, it would actually cause it to become a superficial loss. So that's a very interesting point. And I think I need to do a lot more research on that part, to be honest with you, Curious. Because if it works in one way, why wouldn't it work in the other way? But at the same time, and here's the thing, here's the logic. There should be no tax at all because you sold it there. Even if you moved it out, it shouldn't be, because I think there would be a concern. So if you did it within, so let's look at it this way. If you did it within your TFSA and then you bought it right back, let's say you bought it back at a cheaper price, well, that would be business behavior. That would be the type of thing that they would be looking for when they're looking for like day trading within your account. But if you're buying it back outside because you pulled that money out, that really shouldn't trigger anything. All logic says it shouldn't trigger anything at all. I'll still look at it a little closer, but I can't see any logical reason that would cause an issue. And I think you're fine. I think you're fine, but I will look into it a bit deeper. Rory, 15% yield. That is, let's see. Want to move from non-registered to TFSA and Wealthsimple in January? Can it be done without selling, transfer out, and back in? That's what we've been talking about. That's what we've been talking about. Because one of you guys was mentioning that you could do it in Scotiabank iTrade, and I'm like, because my understanding was that you would have to sell it and then move the money in and then rebuy it. So I'm going to look a little deeper into that and see what's going on with Scotia Trade. What is iTrade doing? How are they getting around that? Because like I said, my complete understanding is you sell it, you move the cash in, you buy it back. So I have to, and you know what? And I'm even gonna screenshot this here, Cowboy, because I'm gonna look into this. I will pull. Yeah, I'll do some research tonight. Ask me again tomorrow. Ask me again tomorrow because I want to find out what the heck's going on with Scotia Trade. All right. Let's see. Paul says, I went from RRSP at BMO Investor Line in kind to Wealthsimple in 2023. No problems. At Quest Trade, transfer from cash account in kind to TFSA. Now I put the money directly in the TFSA, not worry about the tax. Okay. Yeah. It's going to be interesting to see. Like I know with Wealthsimple, for example, there isn't even an option for you to try to just move it from one rate into the other. So that is very interesting. Let's see, King of Day, 85 watching, 45 likes. Let's hit the like button, guys. Mary, where are you at? Guys, yeah, hit that like button for sure. And I'm going to hit the coffee. Oh, that was good. Doorpat says, I hit the button. Mary says, right here and judging very harshly. Thanks, King. Uh-oh. Now you got the captain of the like button and the king. Oh, guys, that's a lot of pressure. Scratch says, did that in January 2024. The bank will sell your shares and buy it at the same price in your TFSA. Ah, interesting. But here's the question, though, Scratch. Is that still generating an event? That's the question. I mean, your bank might do it for you, but is it generating an event? That's, and I think it is. I think when I do this research, I'm going to find, this is what I think. I think, yeah, sure, maybe iShares over at Scotiabank does it, but I think they're selling it and buying it for you all in one move. So it appears like nothing's happening, but I bet you something is happening, and I bet you get a T4, or sorry, a T5, or whichever T it is. I think that's going to happen. All right. Let's see. Do not transfer from non-registered in kind at a loss to, yeah, because that will eliminate. Now, that will eliminate, absolutely. And that's the other point I was sort of talking about. So if you sell at a loss in your non-registered, of course, you get a capital loss. You can use that applied against a capital gain. But if you then buy it back within your TFSA, that will negate that capital loss, turning it into a superficial loss. So that's one of those things that, yeah, kind of one of those little caveats. And that's why I got to find out what's going on with this other thing. But I think it's the banks just doing something kind of funky here. Ian says, down here, I normally tell people I'm an investment banker. Too hard to explain dividend income. Yeah, you could just say you're I'm in investments. There you go. That's all you need to say. I'm in investments. It pays the bills. What can I say? There you go. Let's see, Ian, when I get to know them better, I explain how I can afford to live here. And Doorpat says, I usually max out the TFSA and the TFSA. Those are both the same. I usually max out them. Okay, max them out on January 1st, but don't invest everything immediately. They mostly go into ZMMK or cash ETF and then get invested over time. Yeah, nothing wrong with that. Let's see. In Wealthsimple, registered to registered, yes. Non-registered to register, no. Yeah, you can't even do it in Wealthsimple. Like, that's why I'm thinking, I really think that Scotia iShares, I think what they're doing is, I think they're selling it, they're buying it back all in one move for you. It looks like it's just happening without anything else happening. But, and here's the thing, here's another idea. If this has happened, go take a look at, no, I don't know if you'd still have it. I was going to say, if you could see the adjusted cost base on both sides, that would tell you if something funky was happening. Maybe even going into, if there's an activity log, maybe it's listed in there as well. So I know with National Bank, I can go in, I can look at every single activity. So I would go into the activity log and see if it shows it as a couple of activities. Scratch says, asking tomorrow since we have a Monday show. Yeah, exactly. Monday. Love it. Lord Fubar, gotta go. I didn't even know you were here, Lord Fubar. Welcome and goodbye. Scott says, I'll find out in April, I guess. Well, that's true. Paul says that Wealthsimple, to do more complex things, you might have to call in. Yeah. Jonathan says, Mary's not afraid of the dark, and that's where she'll be waiting for you if you don't hit the like button. Uh-oh. That's kind of scary. Yeah. That is kind of scary. Like, I can't go in the dark because Mary's waiting for me. Paul says, from non-registered to RRSP or TFSA in kind, the broker doesn't sell anything. They just record the closing value on the day you request and just move the shares to TFSA RRSP. Okay, interesting. So that is almost indicating that it might be possible that it's just not being offered in some cases. Interesting. I'm still going to double check, guys, for tomorrow because I just want to make sure we have this clear. I want to make sure we all are on the same page. Rory says, wouldn't want to meet Mary in a dark alley. Doorpat, I have also moved non-registered to TFSA in kind and Quest Trade. Yeah, the price was slightly higher in the TFSA. Interesting. See, now that's going back to kind of what I was thinking. That is interesting. All right. Oh boy. JE says, I tried in kind transfer in Wealthsimple to Quest Trade one stock and it froze my whole account. I wish they have an option you can trade while they do the transfer. Oh, right. Yeah. Yeah, that'd be nice, but you're right. That does kind of happen. All right. Rory, bring a light. Haha. Let's see. I do hit that like button before the stream starts, just in case. Yeah, that's what I always do. But you know what? It's funny. Sometimes I'll be watching a stream and I swore I hit the like button. But somebody might say something like, yo, hit that like button. I just happened to glance at it and I'm like, well, wait a minute. I missed the like button this time. So I'm always checking. Because, while being a YouTuber, I totally understand the whole algorithm. So if I'm watching something, I'm in there hitting the like button for sure. It makes sense. It helps out the other person I'm watching, especially if I'm enjoying it. So that's how I look at it for sure. Oh boy. What was I going to say? Well, let's go to the next comment first. Computer share, you could request the in-kind transfer, the value based on yesterday's close. So you request on a very up day, as yesterday would be lower capital gains. Mary should reprimand Candace for missing the bell. Well, there's no bell today, but yes. Mary is allowed to glare at me for missing the bell. There's no excuse. I'll tell you guys one of the things I am considering. So with the market close. Right now we started at 3:45. So that only gives us 15 minutes. So sometimes I'm trying to get a little bit of news in there. We're trying to look at the market and get everything done. So I am thinking about moving that up. That is one thing I'll tell you because I'm thinking of moving that one up to starting instead of 3:45. I'm thinking about starting that one at 3:30 in the new year. I'm not going to, like I said, I'm not going to change anything, but that's one of the things I do have on the table as a consideration because then instead of, I can sort of expand it a little bit so we can look a little bit more at some of the drivers on what's going on in the news that's causing the market to, maybe to go red or maybe to soar. So that's one of the thoughts I have is knocking the start of that show up by about 15 minutes. So that is, and I really like that idea. So that is one of the small changes that I've got going on in the back of my head. Scratch says 100. Let's see. I just refreshed 57 likes, 71 watching. All right. Let me refresh. I got my test account over on the side. I'm just going to refresh. And uh-oh, now my test account is watching an ad. Yeah, 57, 57. So yeah, that's not too bad. Now you know what? Some of you are watching this on a television. And on the television, it's not as easy, depending on the make of your television. But sometimes I find on the television, it's not always as easy. There's a whole bunch of steps. You can't just quickly hit a like button. So I understand. I understand for sure if you're in that situation. Heather says, good day, Candace. Or if you're watching it on your phone. I think on your phone, you have to like turn it. Like you take your phone, I think you turn it right or something, and then you get the option to like. It's kind of an interesting thing that you have to do, but you gotta go into the landscape to get it. All right, Ian says, I always hit the like button twice to make sure. Ian, that's kind of funny, but if you hit the like button, it turns blue, and you hit it again, it unblues it, Ian. Be careful, be careful. Alexa should be in charge of the bell. The bell tolls for the, I know. You would need to stream another 96 minutes to get a day and week close. Well, yeah, maybe. Well, we'll see. I mean, this is the way I look at it, guys. Like, I don't come in here and say, okay, well, this is the weekend show. It should be exactly 1 hour and 30 minutes. I'm not going to do that. The way I look at it is, if you guys are active and we're having a good conversation, we'll go 2 hours. Well, we've even gone 2.5 hours. So it always boils down to how much we're doing in here, and how, if the questions keep flowing, I keep going. Same idea. Like I try to make the market. I try to make the weekend show at least a half an hour longer. So this show here is designed to be about a half an hour longer than the market close. So the market close typically is an hour to an hour and a half. The weekend show typically an hour and a half to 2 hours, depending on you guys, really. Or if I have stuff to say. Sometimes you guys can stop talking, and I just got a whole bunch of stuff I want to talk about nonetheless. But yeah, it depends. Let's see, Bitcoin. Was something going on with Bitcoin? Now I want to take a look. Let's take another gander at Bitcoin here and see. Oh boy, it's coming back down. So I imagine the 200 that you won earlier on Ethereum is now back to well, it's probably back to nothing. It's probably back to no change, because this is where the morning started. And there's a question. Was that Rory who said that earlier? I don't remember. It was somebody. It was Brian. It was Brian who was talking about Bitcoin this morning. So there we go. So Brian, you're probably breaking even at the moment. All right, Brian says, speaking of Brian, someone needs to take charge of the bell for sure. Candace seems to have an issue. The Christmas wish list and alarm. I really probably should. What I probably need to do is get like just a little, actually, you know what? If I had a little digital clock that just sat on the shelf, like if something I could stick to the shelf, so that way because normally where the clock is on my monitors is off to the side, and if I got glare coming in from the lights, it can make it hard to see. So that's probably what I need. I will do better. I will do better with the bell. I will. Let's see, guys. Let's see. I know right now we've only got 3 shows scheduled so far, but let's see if I can make it to Wednesday. All 3 days with the bell on time. That'll be my goal. I'm going to work hard to make that bell on time Monday, Tuesday, and Wednesday. And of course, if we add a Thursday and Friday, I'll continue it. Maybe. Could you imagine we have a full week and I hit the bell every single time? Paul, I have the live stream on the TV with NVIDIA Shield Pro. Use my phone for chat. Okay, fair enough. Now there goes MSTE. Oh boy, yeah. It's actually funny. So as you guys noticed, we had the Nightbot popping up talking about the subscriber sponsored video, because somebody asked, if I would do it again. And I said, yeah, sure, I would do it. And so, I was thinking about it before the show. I'm like, I have a feeling they want me to do a deep dive on MSTE because everybody's been talking about MSTE. So I was half expecting that to get triggered with me doing a deep dive on MSTE. Um, I'm not going to be nice if I did. I will tell you that right now. Because right now, so we're gonna, don't worry, before the week is out, we're gonna talk a little bit about MSTE. Um, so disappointing. Strategy disappoints me somewhat. Rory says, never mind. Bitcoin is like sums up the leaf season. There we go. Yeah, it's like kind of looks like the leaf season, right? There we go. First half of the season, playoffs. Oh, I hate to say it, but yeah. And this is a beautiful thing. I'm not a Leafs fan, and I know many of you aren't, but many of you are. And even Leafs fans will agree with me on that joke because you guys have lived it over and over again. And I'll tell you, like I'm a Montreal fan. I love Montreal, but even though there's that rivalry with Toronto and I don't like Toronto, I still would like to see them eventually win. I would like to see them eventually win one year, even if it's just to give fans a chance. Like I think how many Leaf fans today were even alive the last time they won the cup? Some of you maybe, but I don't think I've ever lived through a Toronto winning the cup. So I'm just saying it would be nice for the Leaf fans, even if they just got that one year, and then then maybe next year after that, give it back to Montreal. Give it to Montreal. But that's what I would say. But Montreal's in a building. They're still in a building period. I don't think they'll challenge for the cup for a while, but nonetheless. Cowboy, let's see. I enjoy the fact Candace has passion for the subject. If we miss the bell, I don't care. It's just noise. Yeah. I'll bring passion to the stream. And sometimes, you know what? If I nail the bell every time, that's kind of boring. It's kind of fun. It's kind of fun to watch my reaction to missing the bell, but I'm going to do better. I will try. Brian, your phone has an alarm. Yes, but my phone is actually the camera. So it's kind of interesting. So yeah, like the webcam on my laptop, poor quality. Whereas my iPhone does 4K. So yeah, it's kind of like it's the best. It's not the best camera in the house. I've got another really good camera, but it doesn't really work in this type of a setting. But yeah, so it's a situation like even right now, if somebody phones me, yeah, there's nothing. There's no way they can reach me. It's being used. Paul says, non-investing, just changed out the washing machine receptacle. Tried about 6 breakers until I got the right one. Don't you hate that? Bought a heavy-duty receptacle, the old receptacle, and backstabbed a no-no. And here's the thing. When you're playing with a breaker like that, yeah, we end up doing like 6 of them till we figure out which is the one we want. Why the heck don't we ever label it afterwards? Like, why don't we? Because we know the next time it happens, we're going to do the same 6 things. So I don't know. We gotta start labeling our breakers. That's what I say. Paul, let's see. Paul, start how many days with the bell on time? Oh yeah, we almost should. Paul, do a deep dive on HDIV and HYLD. Actually, I've done both of them this year. We'll do them again. But I will tell you, you're gonna see both of them soon, one way or another. One way or another. How does MSTE make any money instead of speculation? Oh boy, yeah. Well, I mean, MSTE, obviously they do make some. They are making some money. Obviously, they're making some money when it comes to the premiums that they're charging for the options on strategy. But oh boy, I imagine they fall short from time to time, probably more than we expect. And if that's the case, we're probably in the scenario where there's higher return of capital on that fund than we're comfortable with. I'm thinking that. There's the Nightbot. And Cowboy, my strategy is avoid it like a plague. The Toronto make me laughs. Oh boy. There's 100. Let's see. Texier show. Some golden hands on Saturday night shootout. The Leafs won in 67. How often do you want them to win? Just once. Just once. 1 year before I was born. All right, fair enough. Let's see. And my dad would remember the Leafs winning, not me. See the Weefs. See the Weefs. Weef. They're the Maple Weefs. I love it. It's like if Buckwheat were a Toronto fan. Maple Weefs. All right. See. And anybody who's not old here probably is like, Buckwheat. Who's Buckwheat? See the Leafs win a cup in 1960s rerun, like Gilligan's Island minus the residuals. Poor Leafs fans. Yep. Brian, I have 18,000 worth of Nikon camera equipment. It ticks me off seeing some camera pictures and videos sometimes. All right, fair enough. Yeah, I mean, at least Gilligan's had Marianne. What does Toronto have? Marner left. Uh-oh. Let's see, joke. What do you do after the Leafs win the cup? Answer, turn off the PlayStation and go to bed. Yeah, there we go. There we go. Scott says, I was there, Candace. I was there 3,000 years ago. I was there the other day the Leafs won. And oh boy, guys. Subscriber-sponsored video has been triggered by none other than Paul. So let's see here. A deep dive on Hamilton's HDIV and HYLD, what the underlying ETFs are and do, performance over the last year. All right, I got to do it now. I got to do it. It looks like it's going to be both. Typically, I normally just do one, but you know what? It's Paul, so we will get these here done. They will be done before the end of the month, Paul, so I will probably see them next week, so probably a week from Tuesday. I think that's the most realistic that you're going to see those drop for you, but I've got to, just give me a second. I need to, first of all, there we go. I'm going to do this to highlight it, and, well, you know what? You get a goat. You get a goat nonetheless. There we go. Paul is the goat, and, oh, you know what? And the beaver. You get both. You get both. You threw me two, you're getting two. So Paul is the goat and the beaver. Thank you very much, Paul. And we will get those done. Paul says, I made money on MSTY, sold it for MSTE, and lost a little bit when I sold it a couple of months ago. Fair enough, fair enough. All right. Before I read harvesting, before I read harvesting, I'm going to turn off I'm turning off that Nightbot. There we go. There we go. All right. Harvesting says, there we go. I want to be able to see it. For some reason, it is, all right. All right, let's go here. Let's go here. There we go. It was highlighting it, right? But highlighting the text too, so I couldn't read it. Harvesting income. All indexes, gold, silver, other assets seem expensive or gone up already. Are there any assets that are currently cheap or at reasonable value with scope for appreciation? That's a good question. So, yeah, when we look at gold, I mean, gold has gone up a crazy amount in the last year. Like it has, you know, there's been like, especially gold companies. Gold companies have, a lot of them have doubled in value. Obviously, gold hasn't doubled in value. So, can they keep it up in 2026? Yes and no. I'm going to give you both. So the no is that, yeah, I don't expect the gold companies to double in 2026. So gold companies like London Gold, I don't expect it to double. But I still think we're going to see some movement on gold through 2026. But I don't think it's going to be enough to really give us the big giant growths that we've already seen. So I think we're still going to see growth, but it's going to be a little bit more tempered. So if you look at something like London Gold where they've gone up, well, hey, you know what? let's go to London Gold. Let's actually pull this up here to make it a little bit easier to sort of see. So London Gold, LUG. All right, now London Gold has gone up, I believe, about 200% in the last year. So let's pull up that 1 year, and you can see right here, like they entered the year around $33. So that's even more. That's like 300. That's almost 300%. So they've gone up about 300%. You are not going to see another 300%. They're not going to be worth 300 and some odd dollars or $330 at the end of the year. It's not going to happen. No ands, ifs, or buts about it. But will they keep going up? Yes, I think they will. I just don't think it's going to be as explosive. So, and that's the same thing with gold. I think silver has more potential to go up a little bit higher than gold over the next year. And I'm also pretty bullish on copper. I think copper is going to be another solid one. Uranium, another solid one, especially if AI continues to keep going forward. And there's no reason that it wouldn't. And here's the thing. If you think about the AI bubble, a lot of people are like, yeah, the AI bubble's going to break. All right, let's say it did. Does that mean that we're all of a sudden no longer going to have AI, that we're no longer going to need any of these AI data centers? No. The AI is transformative like the internet. If you think about it, when the dot-com bubble burst, did the internet go away? Did we just shut the door on our computers? No, we did not. And that's the same idea with AI. AI is going to be around. It's not going anywhere. It's not unless we have some kind of a cataclysmic event. And then we'd have a lot more other things to worry about, trust me. Yeah, AI is here to stay. It's here to stay. It's not going away. These data centers are still going to need power. That power is going to keep on increasing. AI is going to keep on getting better. Like these companies, when you look at these AI companies that are spending crazy amounts of money in AI, if there was a chance that that was all going to come crashing down and all that money was just going to be thrown away, there's no way they would be spending the amount that they're spending. It's simple as that. So it's going to continue, and that's going to keep on making things like power as being a big issue, and cheap power. So for example, a lot of AI data centers are looking to Canada. One of the reasons is, well, they can utilize some of our colder temperatures in the winter to sort of help with that cooling bill, because these data centers, they need a lot of cooling. That's where most of the power is going. It's not going to light up the circuit boards. It's going to keep everything cold, because when you're running that amount of processing power, it creates a lot of heat, and you don't want to be burning out all of the circuits, all of the circuit boards, all of the processors, all of the GPUs. That is one of the reasons that Canada, and also other places like Norway, any of these northern countries, yeah, sure, they still have to pay a crap ton in the summer, but in the winter, they can pump a lot of cold air in through vents, and they can use that to sort of help manage that cost. Also, you can also get access to natural gas. So we've been talking, like earlier, we were talking a little bit about natural gas. Is it going to go up in price? Well, yeah, absolutely. It will go up in price because it's going to be one of the things that helps power some of these: natural gas, nuclear, even good old oil. But they're going to go for whatever's cheapest, and get the most power that they can get. It's happening. That's one of the reasons. Like even Google was investing in nuclear power. Why? Because they need it. So yeah, I think looking at it from that perspective, there's going to be a lot of appreciation. And I think commodities, and with copper a little bit different. Copper is not being used to cool anything, but copper it's a very interesting mineral. It is, because of its ability to conduct electricity as well as it does, it becomes the core of almost everything electronic. And as it is right now, copper is expected to be, there is expected to be a copper shortage by about 2030. So I think copper is something right now, and right now the price is still pretty low. So copper might be one of those ones that could be very interesting to get in and ride it out towards 2030. All right, there we go. I felt like I didn't take a breath during that whole time. I know I did, but I felt like I didn't. Ian says, thanks, Paul. Looking forward to the video. Get the beaver for Paul. Chad will appreciate. Yeah, Paul got both the goat and the beaver. Thanks, Candace, as well. There you go, Paul. Thanks, by the way. And by the way, guys, Paul wasn't even the one who requested that I bring back the subscriber-sponsored video for today. Scratch says oil is as cheap as you can get. HYLD is my fourth largest holding. If you combine it with SPYI, it is my biggest holding. I should see what the difference between the two are. HYLD has outperformed SPYI by quite a bit. Yeah, I love HYLD a lot, so I'm looking forward to this deep dive. It'll be a good one. And I'm already in the back of my mind starting to form ideas on how I can present it with the two. So definitely going to be interesting. Maybe it'll be like a buddy movie, except for a buddy video. There we go. Cowboy, looking at more IPO, nice monthly div, less cost than FRU for some div. Okay. Let's see. Tom Nash talks about the money makers of bubbles are the picks and shovels. The picks and shovels of AI are chips and power. Yeah. Yeah, absolutely. I'd agree with that. Sounds like more data centers coming to Alberta because of natural gas power generation. Yeah, exactly. That's exactly what I was talking about too. So yeah, natural gas right there. Yep. Let's see. Grand Prairie region seems to be ground zero. Yeah. Chuck says, what's your experience with DIV as an income fund? Is there any truly diversified royalty fund or ETF? All right. So DIV, diversified royalty. Great little company. They're actually based out of Vancouver, guys. In case you were curious, but they own a lot of really interesting royalties. They have the royalties on like Mr. Lube, I believe Jack Astor's, and they have that the Chuba Hut is the new one that they added from the States, and that's huge because that's the reason their dividend went up and why they had a big jump in price during this year. So I've been a fan of DIV for a long time. They have a pretty half decent dividend, and actually, guys, I should probably pull them up. If I'm talking about them, let's pull them up here. DIV, here we go. So right now, $3.75. It's fantastic price. I'm going to pull up the last year here, and this is the whole Chuba, the Chuba Hut, or the Chuba Hut. Yeah, the Chuba Hut right there. So yeah, this is big, and they also increased their dividend here, and they've been, yeah, they've been pretty good. They've been pretty solid since then. One of the things I love too is they're not an expensive stock. You can add them pretty cheaply. Right now they're priced at $3.75. I do have them in the 0 to 100K challenge. I think I got about 120 shares of them. And they're doing fantastic. They're actually, if you watch the 0 to 100K challenge update that came out earlier in the week, they're in the top 5. They actually broke into the top 5 as most, of the largest total returns in that portfolio. So I love Div. I love them. They're very good. They're very good. And like I said, they have a half decent dividend. Like what is it? It's not 10%, but it's up there. There we go. 7%, 7.6%. Not bad. And you are getting some growth with them as well. Like this here really, really helped because before this they were like around 280. So they've almost, that's just crazy going from 280 to 375. They're a good company. I like them. I like them a lot. Ian says, I could not do a live video this long drinking coffee without taking a break, or it would be a different kind of live stream. Yeah. I will say, before the live stream begins, I do my business. I do my business because I know it could be 2.5 hours before I before I see anything. Let's see. Speaking about a man and a horse, Quebec sold pretty much all of its hydro energy at a cheap price. Price will go up, way up. I would agree. Energy's gonna be a little bit at a premium. Now, there are some technologies that are being worked on that could change that, but they're really, really, really far away from being being a player on the scene. So I think for the foreseeable future, energy is going to cost a lot. Yeah, for sure. Paul says, just printed something to the printer. Dog ran over the printer. The second print came out and she started barking at the printer. Nice. Yeah. Yeah, the cat actually. She tends to take a little bit at when the printer is going. She gets very, and it's funny. My printer, occasionally it'll just turn its wheels for no reason, and that always gets her attention for sure. Let's see. I can walk away with my Bluetooth headphones. I've done that. First time the dog has seen a print happening. Oh, interesting. Yeah, well, your dog is fairly new, if I remember. Thanks a lot for answering my question and sharing your perspectives. Oh, you're welcome. Dogs are weird. I'm a cat person, but I do like dogs. Most of Quebec's power is from Labrador. Let's see. Hell no. And hi, Candace from A. Well, hey, how are you? Paul says HDIV and HYLD both share a few of the same underlying Hamilton ETFs. Both have AMAX, QMAX, EMAX, RMAX, QDay. Yes, I'll have to, well, from the terms of your subscriber-sponsored video, I have to look at that, so. Let's see. Please estimate a timeliness for tax loss harvesting in Santa Rally. This will be my first year as an investor. Okay, all right, fair enough. So the whole idea of the tax loss harvesting is obviously this is the last part of the year that you can use. If you're going to take losses, you want to take them now because you can apply them against earlier gains in the year. So to do that, it has to happen before the end of the year. And not just the end of the year, you have to also consider settlement. So we have what's called T+1. So basically, after the day you buy or sell, it takes another full business day before it settles. It used to be T+3. So because of that, you have to, all tax loss harvesting has to be done with at least a full business day left in the month. So technically, the 30th would be the last day for any kind of tax loss harvesting. However, I think a lot of companies don't like to sort of do it at the last minute. So you will start to see tax loss harvesting begin with some companies. It will begin early in the year, like not early in the year, but early in November. So middle of November, you'll see a little bit of it coming on. Usually once we get into December, that's when you still got institutional, but you also got a lot of the retail people who are doing it as well. So normally, once that's finished, they've created these losses. They're sitting on money. Now it's time to redeploy that money. That's what causes the Santa Claus rally. Now, typically the Santa Claus rally used to start around, well, right around Christmas and then go into the first couple trading days in January. But now that there is longer time with that T+1, the Santa Claus rally could start as late as right at the end of December and then go maybe 2, maybe even 3 days into January. So it is a bit shorter. So we're going to have to see how that all rolls out. But at the same time, if a company has taken all of their losses before, let's say they've got them already done now. Let's say they're done. They could redeploy some cash if they wanted to. And that's not going to impact their taxes, because if they're redeploying capital into new investments now, because let's say there's opportunities, it's not like they're going to sell those before the end of the year and create any new gains. So, you could see some upward pressure as well as some downward pressure. It might even itself out as we get closer to Christmas. But look for it, in a nutshell, look for it right after Christmas, going into the first few days of January, first few trading days of January, so the 3rd or so. And I'd have to look at a calendar. I think it might even be the 4th or 5th, because the 3rd, is the 3rd of January like a weekend? I think, because New Year's Eve, I believe, is on a Thursday. So then the 1st would be, yeah, so you're right. I think the 3rd, I might be right. I think the 3rd is a Sunday, maybe. So it might be the 4th or 5th of January, if that's the case, that we roll into a weekend right away after the holiday. So what can I say? All right. A says, what do you see ahead for financials versus REIT sector? REITs falling, increasing long-term bond yields. REITs have been very disappointing this year. And I think and I've talked a little bit about this already. I think what's been going on here, you know what, guys, if I'm not using the thing, I should come up big. Um, I think what has been going on with REITs is that in the olden days, before the explosion of covered call funds and the explosion of income investing, REITs were kind of one of those things that income investors used to turn to because they had half decent dividends in the day. And that's always been the way for REITs. So once the rates come down, people start moving their money from bonds over to REITs and utilities. Now, utilities are still doing fine. Like they're still doing okay, which is great. But it looks to me like a lot of investors are looking at REITs and saying, well, why am I moving to REITs now? There's a lot more options. There's a lot of these different covered call things. I could be making a lot more money, and some of them are pretty darn good. I think we're seeing some of that shift move over that way. In addition to that, there is also the whole changes that the Liberal government made to immigration in the fall. That's pretty much because at the beginning of the rate cuts, REITs were behaving the way they normally do. And then the immigration story changed, and that did help. That certainly helped knock REITs down. Now, I think REITs will do better in 2026, but I don't think we're going to see the pump. I don't think we're going to see a giant pump. I think we'll see maybe a mild pump, but not, I don't think they're going to be, I think if you're looking for income, I think REITs may not be the place to look. Um, and I love RMAX, but it's not doing great. It's not doing great. I had hoped for much better than what we've been getting out of it. I don't plan to sell. I'm happy with the income that's coming out of RMAX, and it's holding, it's not losing money, but I thought it was going to do a lot better than it has, for sure. Scratch, Labrador didn't had the grid to export, and Quebec did. NFL did not, got a bad deal, okay, over the Quebec grid, but it's not QC bad, okay. All right, Danielle says, if I want to optimize my TFSA for 2026, in your opinion, should I sell more S&P 500 or should I buy more S&P 500, HHIS or HHIC? I will probably sell my NVHE, already have VDY, VFV, HHIS, HYLD, RY, and FTS. Oh, the good old Fortis. I love Fortis. All right, so you're looking to optimize. Well, let me ask this question. Let me throw this back at you. I'm looking here, and from what I'm seeing, this looks like a hybrid portfolio. It looks very hybrid because you've got some good income in there, and you got some solid growth going as well. So it really boils down to which side you want to double down. Now, with 2026 coming, I will say this: if we get a recession, and right now, oh boy, I predicted one for this year, but it did not happen. And even the latest jobs information, the latest GDP, I'm even beginning to wonder if we're going to see it happen in 2026. I mean, I know we need to pay the piper somewheres down the road. The economy, it just can't keep going at the pace it's going. But if it does, then you got a couple of interesting things. HHIS, HYLD, HDIV, HDIV. Some of those funds I think will do really, really well. HHIC, another one. So in that case, now, if you think that we are going to see some turbulence, you could make the safer play. You could go with, more into VFV, VDY, and that's, I think both are fine. Like even if, so let's just sort of play, if we get a bear market, yes, things like HYLD will come down because if the underlying assets come down, well, so will the fund. And will you get a dividend cut? You might, but you might not. It really depends on how bad things get. Obviously, if things get bad enough, yeah, you'll see dividend cuts. But those will be great opportunities to sort of double down and, also to sort of average down, and you'll get a lot higher yields as prices come down. So that's always a nice thing. So that's kind of that option depending on which way you're leaning and what might be, and let me have a sip of coffee here first. What may very well be your deciding factor is that runway that you have towards retirement, if you've got a long runway, I would play it more safe. Why not? It never hurts to be on the safe side, to be a little conservative. But if you're planning to retire within a couple of years, then you may want to, at that case, start doubling down a little bit more on the income as you get yourself ready to maybe transform your portfolio into an income producing machine, because that's one option with retirement. Now, if of course, and some people will retire and they got pensions and they got lots of money and they don't even need to turn their TFSA into an income generating machine. If that's the case, if your TFSA is going to be used basically as an inheritance down the road because you've got more money than you know what to do, then you might want to still stay safe. It really depends on what your actual goals are, the time frame. So you want to pull all of that together, and that will help give you a better plan. I don't have enough information to sort of come in and say, do this, because I don't have enough information for that. Scratch says, Quebec built its own grid without any finance from Canada. Got to have some returns in some ports. Oh, guys, let me, oh, I'm going to show you something here. Going to show you something. Say hi, Winter. This is Winter. She's been here the whole time. Oh. Anyway, I know you guys like the kitty cat. So, she, for the most part, she's been asleep. She only just woke up. So she's been asleep. Now she woke up and got a chance to say hi. Okay, Mode Pup. Would you start a position in Lumine Group or GeoEasy? Both are ripe for the picking, according to Jordan Zinberg, who has high conviction in both. Let's start with GoEasy. Oh boy. So GoEasy, and they've done fantastic. I'm going to pull them up here. So of course they're in that financial sector. Whoops. Let's try to pull them up here again. So if I remember correctly, they do a lot of lending. So they do lending. More or less, a lot of the people they lend to are lower income people. Not all, but like if you go to a furniture store and you want to get the card or something for the furniture store, a lot of times it will go through companies like these. And I'm going to pull it up here and take a look, and you'll see they had, and I'm going to go to the 3-year just because you can get a better idea. They have been doing pretty good. They've been doing pretty good, but they have come back down from this. And are they ripe? Maybe. Now, here's the thing. As people need stuff, but finances are tighter and tighter, yeah, there's going to be people who will need that type of, to be able to borrow money, to be able to utilize that money. That is good for a company like this, and that could very well, it could very well make them a good company to invest in for that reason. Now, I will personally say, I tend to stay away from companies like this personally, just because I don't want to say morals or something like that, because I like to make money, but to me, I don't know. I've always thought that there are better options. But yeah, if you're thinking, will this company make money? Yeah, it probably will. Now with Lumine Group, we'll go over. All right. Lumine Group is a completely different thing. So Lumine Group is, if you look at Constellation Software, so they spun off, of course, Topicus.com, and this is another one of their spin-offs. So this here is, this is tech, this is technology, and we're going to pull up that 1 year, and you will see that the groups, pretty much all three of them, Constellation Software and Topicus.com, they've all kind of experienced this. Part of it was the fear over AI, being able to, because when you are a software type company, a lot of people are like, well, AI can do that. That might impact them. Now, the challenge is showing that the services that they offer can actually perform better with AI, that they can bundle AI into it to make it a better experience for the customer. I think they will do that. This is a good company. Overall, the whole Constellation software ecosystem, I think is all very good. So I think, yeah, for Lumine, I would say, yeah, this is not a bad place. If you wanted to get in, heck, if you could have got in at the 23, that would have been even better. But I think I think Lumine will be fine. I think Topicus will be fine. And I also think Constellation software will be fine as well. All right. Cowboy says Muskrat Falls is going through Newfoundland, then to Cape Breton to avoid giving Quebec more power. Let's see. Equalization payments makes projects affordable. And now I could tell equalization isn't equal at all. And yeah, that's the thing. I know that this is kind of a sting point for a lot of the Western provinces. It's like, especially, you look at Alberta. Alberta is a very rich province. So when it comes to equalization, they're kind of givers. They're not receivers. And I know what some of the arguments are, and I've heard them. I've heard like Alberta's like, well, we're okay with the Maritimes. They need it. Yeah, sure, that makes sense. But why does Quebec need it? I've heard a lot of things like this, and I don't know if Quebec needs it or not. But maybe the system needs to be made a little more fair. I don't know. Rory, I know Alberta gets none. Oh, exactly, that's what I was saying. I don't think Newfoundland or Saskatchewan gets any either. Let's see, progressive investing. I'm from Saskatchewan, and after reading how the calculations are done, I now see it is fair. Okay, and I will say, I do not know how the calculations are done. So maybe there's more to it than we want than just sort of headlines, for sure. So that I don't know. I honestly don't know. Scott, T+1 wasn't a huge push just before I left a certain financial institution, and they were already talking T+0. That is, yes, T+0 is something that's being talked about, and I think India wants to move to T+0, so I can see T+0 coming. There's no reason why it should take forever to, to settle things, so I can see T+0 time-wise. I'm not sure what the time-wise is, but I bet you by 2030 we'll be on T+0. So, within the next 4 years, I think we'll be there, hopefully sooner than later. I'm all for T+0 personally. Scratch says, guys in the West, I am not saying QC is doing great, but you need to realize that we send way too much to Ottawa, and you probably are too. Yeah, government's bloated. Our federal government's bloated, so, is it, I don't know, like I said, I really don't know how fair that system is, but I will say it never hurts to re-examine stuff for sure. Let's see, indeed, government just has to get the red tape out of the way. Absolutely. King of Day, since Santa Rally tends to run until January 2nd or so, would you recommend lump sum after that day, or it doesn't really matter? I would say if you've got good deals between now and then, I wouldn't wait. If you've got a good deal in front of you now, there's no guarantee you're going to have a good deal in front of you tomorrow. So, or next week. So I look at it this way. I'm not saying that you should deploy everything, but the cat's, there we go. The cat's leaving. Quebec gets the most from equalization. I heard that. I can't confirm it, but I have heard that. Liberals are like an ostrich. Oh boy. Scratch. We pay twice as you are, Cowboy. Okay. Let's see. We still pay for taxes for gas, which we paid. Taxes are crazy. No matter where you are, I think taxes are crazy. All right. Let's see here. Danielle says, do you think VDY is still a good buy at $61? My average cost is around $42. Okay. Let's take a look at VDY. I remember this time to bring it back up. All right, VDY, here we go. So this here is your Vanguard FTSE. So these are high dividend stocks, and we'll pull up the three. Now this has been an ETF that has been on a pretty good climb, and with the Canadian market doing well, it should continue to do well. So, is it a good buy at 61? Well, obviously it was a better buy at 42. You bought it down here, so that's not too shabby. I do think it will still go back up. I still think it will go up higher. How much higher? It's hard to say. It really depends. If the Canadian economy, if it keeps defying everything, and if the stock market keeps defying everything, like when you look at 2025, the TSX has outperformed the S&P 500 big time. So Canada's kicking butt this year. And if we continue to do that, a company like this, an ETF like this will do fantastic. You could see, you might see it up in the 70s by the end of 2025. So is it a good buy? Yeah, it's not a bad buy. If you're looking for a good, if you're looking for a good growth, because this is technically total return stock, I think it's fantastic. You're not getting a ton of dividends. Like if you look at the yield, it's only 3.658%. So, but it is a good total return growth, dividend growth. So yeah, it's not bad. It's not bad. Cowboy says, really show me how Alberta puts in and Quebec takes away, and we are getting value for that. I know nothing about that. I'm gonna move away from the equalization talk, just because I don't think I have anything to add to that conversation at this point. Ian says, I got my REITs in my RRSP. If I'm going to have something underperform, that's a good place for it. Yeah, absolutely. I mean, I think REITs are still I think they're still going to go up. I just don't think they're going to go up a lot. Just to point out, I think 2026 will be better than 2025, but I'm not expecting it. There's one exception. There is one exception. If you have a company that, whether it be a REIT or whether it be REIT-like, that caters to long care homes, that's an exception. So when you look at something like Extendicare, they're just doing fantastic. They're exploding. Well, look, let me show you. Extendicare, EXE, here we go. Now, this is not technically a REIT, but they run long care homes. So that's why I'm saying they're kind of REIT-like. But here, let me just pull up the last year for Extendicare. They've been climbing steadily, and now they've really exploded in the last little bit. But there's a huge demand for long-term care because, well, boomers are getting older. They're getting to that point where some of them, not all of them, but some of them need that little bit of extra help. And their Gen X kids are like, I don't want to deal with mom anymore. Isn't there a place we can send her? Yeah. Unfortunately. And that's it. That's in jest. But yeah, in some, you know what? Yeah, I mean, there are some boomers that are needing that extra help. So it's happening. It's happening. And that pretty much any business that caters to, people in that later stage of life are going to do really well for a long time now, because you got the boomers, and Gen X is not that far behind them. And that's a pretty big group as well. They're not as big as the boomers, but there's a lot of them. The millennials are safe. We got a long way to wait for the millennials. So that group is, I wouldn't worry so much about them. Harvesting says, I've been adding XLU, S&P 500 Utility Select ETF. I intend to add more on dips. The goal is to sell partially if utilities rally. If not, I don't mind holding long term. Request your thoughts on this. I love utilities. So obviously, one of my favorite stocks is Fortis. Fortis has been doing really well. Fortis is a dividend king, by the way. Canada only has two, and they're both utilities, Canadian Utilities and Fortis. So that a dividend king, it means that they have raised their dividends for 50 or more years in a row. So it's pretty difficult to get there. Like the U.S. has quite a few dividend kings, but Canada has two. And nobody else is even close to making that list. So I imagine I'll be retired before we have the next dividend king. I'll put it out there that way. But utilities they're great for a couple of reasons. One of the big reasons is that, one, they're going to have low beta values. So there's going to be very low volatility with utilities because a lot of what they do is regulated. So you take a company like Fortis, and Fortis, they're based out of St. John's, so out of Newfoundland, but they're a North American company. They really are. They have, they service power many places in Canada, many places in the United States, but as a result, any of the places that they're doing business a lot of time they've got contracts. They have rates that are just already worked in the contracts. So even if the economy goes down, they're still going to get whatever they've, whatever rate has been signed into contract. They still got steady income coming. So that makes them very, very stable, even in recessions. Even in a recession, utilities are fantastic. And they're also really good when rates are coming down. They love low rate environments because, one, they get more people investing in them because they tend to have half decent dividends. In addition to that, they also are pretty good at, that's when they expand. So when they're looking at, for example, if they want to get more renewable energy projects going, that's when they're going to do them, when the interest rates are low. So they tend to be a really good investment for sure. And when you're going with something like a utility ETF, yeah, they're a great way, because that way there you're sort of hedging your bets. I know in the challenge right now, I have Fortis because I love Fortis, but I also have XUT, and you'll see this here. This is the iShares capped utilities. This is not a covered call. It's just a straight up utilities ETF. And I'll pull up the 1 year and you can see same general idea. It's been moving up. And I think it'll do fine for a while. So yes, very much I like utilities. And I know you're looking at the XLU one. Another good one. Another good one. All right. Now I'm getting behind, so I'm going to skip over. If you're talking to somebody else, I'm going to skip it over it. Heather says, Yaz, winter's so darn cute. Income producing machine. What would you put into a portfolio to do that, Candace? How many ETFs is best for diversification and stability? Well, it depends on the ETFs, right? I can't give you a number. I can't say you need 5 ETFs, because you don't. If you're going with something that does have a lot of diversity. So when you're looking at income, so for example, with Canada, we got HHIC. HHIC is a really good diversified, because there's a lot from multiple sectors, and that's a good income one. So there's one that you could certainly look at. HYLD, HDIV, HDIV as well is also Canada. HYLD is mostly US. Those are other ones that are pretty darn good. And they're giving you bigger exposure. So a lot of times when you're looking for big exposure, if you look at those ETFs, now HHIC is not that ETF, but you look at something like HYLD where they're holding other ETFs, because you have other ETFs and each of those ETFs is holding another big basket of companies, you can get some really good diversification. So HYLD would give you incredibly good US diversification. HDIV on the Canadian side will give you a little bit of US and a lot of good Canadian diversification. So that's what it really boils down to. If you're holding a few ETFs that are giving you really good diversification, that does cover you pretty well. Not to say, and I always say this, if you're using covered calls and things like that, I always say at least pay attention to them, see what's going on. For me, covered calls are really not a set and forget type thing. And there's some people that will. There's some people that will set and forget them. Actually, Adriano, I think Adriano kind of has a set and forget, because he just keeps adding and adding. But at the same time, I'm pretty sure he's watching them. I always like to watch, make sure nothing is going out of whack with them. For the most part, though, I think they're safe. I think that they're getting better and better. And a lot of these management companies, if something is awry, they're gonna work to fix it. HYLD is a perfect example. When they launched, they were not holding their own ETFs. They were holding US ETFs, and they had no control over the ETFs they were holding. So they had a little bit of problems in the beginning, like during the bear market. They ended up cutting their dividend a little bit, but they reinvented themselves by getting rid of the US ETFs, and Hamilton created their own ETFs, and now they have control over the ETFs that they're holding, because they're holding Hamilton ETFs. And you could even say recently they reinvented themselves again, and you'll notice there was a dividend increase because Hamilton came out with their 0 day to expiry, ODTE, which are the Daymax line. and they brought a couple of the Daymax in and got rid of some of the bonds. Bonds are kind of, it's funny, but bonds are kind of falling to the wayside a little bit. A lot of people used to, I would say, bonds used to be a little bit more of a staple than they are now, and a lot of investors don't even touch bonds anymore at all. You know, what can I say? Cute cat, yep. Oh yeah, she's a good little cat. And you know, and it's hard to believe she's actually coming up on 2 years old. I still call her the kitten because she was the last one that we had. Angel says, "What a beautiful cat." In another form. All right, let's see here. Stock Trades did a video on Go Easy. There are some sketchy practices I hear. And there we go. You see, that's what I'm saying. I just don't, and that's the whole thing. I don't like companies like Go Easy. It just, I don't know. For me, it just doesn't feel right. And if there's sketchy practices going there, that's something, yeah, something you may want to look into. If you're thinking about going with Go Easy, if I even hear there's sketchy practices, yeah, look into it, guys. Don't just jump in. I do not see the chart. What chart? Oh, I'm not sure which chart. Let's see. Danielle, you are giving me a lot to think about. I am 53 and I'm retiring very soon. I think I might go with HHIC and maybe a little more HHIS. Absolutely. And Kelly, predatory lending with high interest rates. Yeah, and that's one of the other things I don't like. So a company like Go Easy, yeah, they will give loans to people who most people can't get loans, but you're paying for it. You're paying with higher interest rates. And I understand. If you're a higher risk level, they're like, okay, we should charge you a higher interest rate. Well, I think, I don't know. Like if you want to go even worse, like if you look at the payday lenders, they're even worse. So I just have this thing about if somebody's going to charge outrageous interest rates, that's one of the reasons, like, I would never use Go Easy. And you know, Kelly is right here. It feels very predatory to me. That's one of the reasons I won't touch them personally. Danielle says, thanks, Candace, for your wisdom. You're welcome. Go sleazy. All right, that's a good one. Scratch says, wish you all green candles like the silver charts on the open of Crimex. J.E., cats have expensive tastes. You buy them scratching posts, they never use it, but they love leather coaches. Oh, yes, they certainly do. Yeah, and that's exactly what we were just saying, Rusty. So, yeah, I would say 34% interest on a stereo. You know, I wouldn't pay 34% interest on anything personally. Rory, I'll never enter their stores. I see nothing. All right, let's see here. 34% interest. Are they part of Money Mart? They're not that far off. Thanks for answering my question. You're welcome. Schultz from Hogan's Heroes. I see nothing. T plus 0. That's what we want. We all want that. So yeah, T plus 0 equals settle on the same day. Comes in handy for ex-dividend days on dividend stocks. Yeah, absolutely. Now, I don't know if it means that and here's the thing. I don't think T plus 0 is going to mean that it settles the second you make the trade. I think it'll probably settle at the end of that trading day. So when the market closes, it'll settle. By the way, Vanguard trades and Scotia iTrades are free, $6.99 or $9.99 for everyone else. Interesting. Yeah. Well, my understanding, and maybe I'm wrong on this, but I thought Scotia Trade had commission-free trading on ETFs. I thought they did. Maybe they don't, but I was under the impression that they did. But I've never used Scotia iTrade, so I'm not sure. Brian says, I got out of TD in August and September and moved to Wealthsimple. I had enough of their $9.99 trades. Yeah, I can understand that. Overall fitness. Portfolio is currently XIC 30%, IVV 30%, URTH 20%, XEI 8%, Biggie 8%, Cash 4%. Is XEQ a better option to save on fees and simplicity? Yeah, so XEQT, one of the reasons I love XEQT is you just can't beat the diversification. You're looking at pretty much global diversification, emerging markets. it's got a lot of good stuff in there. But now, if you're looking for a little bit of income, you're not going to get very much from XEQT. They don't pay a lot. It's more of a growth situation with them. And I notice here you do have a few in here that have some better dividends. I always say, in a case like this, it doesn't hurt to add like a smaller position of something that has a lot of diversification. It certainly helps buffer out the rest of what you're holding, for sure. Let's see here. Anchor Tours. What are your thoughts on XIC? I've been comparing a lot of ETFs, and it's hard to beat in terms of diversity and performance. Okay, let's first of all, let's bring up XIC. I think I did a deep dive at one point on it, but I'm not 100% sure. I know I did XEI, but let's see. There's the iShares. So yeah, we're looking at a cap composite index ETF. So, you know, this is going to be, I mean, this is going to give you a good Canadian diversification for sure. And I expect, we'll look at the 1 year, I do expect it to be up quite a bit. Yeah, and we are. This is kind of the story of the Canadian market this year. So yeah, it is a fantastic if you're looking for Canadian diversification. It's not going to satisfy, obviously, your U.S. and any of your international diversification, but you are going to get a good amount of Canada in here. Now, I don't have, on here, it's not going to show me exactly what it holds, but, you know, it's going to have, you're going to get good diversification on all of your big stable Canadian stocks. You'll definitely get some energy. You'll get some banks, pipelines, energy, the mining sector, all of the good ones. I do like XIC. I think it is a good one for sure. And I mean, you know, I would compare, like, I know a lot of people love VDY. I would say, you know, if you're not a fan of VDY, XIC could be another option. I find them, I don't want to say too similar, but they're similar like a little bit. All right, Cowboy says Go Sleazy is a credit card for people who can't get a credit card. Yeah, unfortunately, that's kind of true. Futures are flat this afternoon. All right, King of Day, I've got to run. Good show as always, Candace. Happy investing, everyone. Enjoy the rest of your day, King of Day. Paramount Plus shows Landman has a new character played by Sam Elliott. The character is a core home waiting to DU. Actually, funny thing, Paul, actually watched episode 1, season 1 of Landman. Watched that yesterday. It was bad. It wasn't bad at all. I liked it. It was pretty good. So, looking forward to see where that goes. Hi, Candace. New to the channel. Thank you for all the info. Well, welcome to the channel. Welcome to the channel for sure. All right. Some of us remember paying 3% commission in and out. Yeah, we're all spoiled now with zero commission, aren't we? Cowboy says QQQXQT versus Utes. That would be an interesting one. That would be an interesting one for sure. Loan Sharks and Sons. Uh-oh. Love XIT. It's 8% of my portfolio right now. There we go. Go Sleazy keeps bailiffs really busy. Repo on defaults. Absolutely. All right, guys. Oh, this is another great show. You guys are awesome. So we hit the 2.5 hours again. What can I say? I will be back tomorrow afternoon. We'll do the market. We're going to do the market close and on Tuesday. We'll also have a new video coming out for you Tuesday. I am not 100% sure what it's going to be. I think my bet is it's going to be the new video, and I'll talk about it tomorrow. But it could, there is the potential that it could be the interview I did with 9 Point. It's going to be one of the two. It depends on their timing on that, because it is in the hands of their compliance at the moment. But either way, we got 2 great videos coming for you this week. Next week, we're going to do the subscriber-sponsored video, the one that Paul requested. So it'll be a deep dive on two ETFs, HYLD and HDIV. It's going to be fantastic. All right, guys. We will be, I can't leave. I can't leave till I'm big. Yeah, Brian says, have a good evening, everyone. See you tomorrow. Scott says, thank you. See you tomorrow. That's a great one to end on. Guys, have a fantastic week. We will see you tomorrow. Until then, bye-bye.